Understanding covered bonds, exploring unique financial instruments and their benefits. Presentation agenda. What are covered bonds? Covered bonds are debt securities backed by cash flows from mortgages or public sector loans. Characteristics of covered bonds. These bonds are characterized by their dual recourse structure and strong legal protection. Benefits for investors. Investors benefit from stable returns, lower risk, and high credit quality. Regulatory framework. Regulatory framework ensures the safety and integrity of covered bonds in the market. What are covered bonds? Definition of covered bonds. Covered bonds are secured financial instruments linked to a specific pool of assets. Difference from mortgage-backed securities. Unlike mortgage-backed securities, covered bonds stay on the issuer's balance sheet. Usage in regions. Primarily popular in Europe, covered bonds are gaining traction in other areas. Definition and structure. Definition of covered bonds. Covered bonds are debt securities offering investors dual recourse to both issuer and underlying assets. Dual recourse structure. Investors benefit from claims against the issuer and the assets, enhancing investment security. Types of covered bonds. Mortgage covered bonds. Mortgage covered bonds are backed by residential or commercial mortgages, providing security to investors. Public sector covered bonds. Public sector covered bonds are secured by loans to public sector entities, showcasing government backing. Characteristics of covered bonds. Lower risk. Covered bonds have a dual recourse structure that significantly reduces investment risk. High ratings. Typically, covered bonds are rated higher than unsecured debt due to their structural secured features. Stable cash flow. Their structure ensures a stable cash flow, appealing to conservative investors. Attractive to investors. The combination of security, high ratings, and stability attracts conservative investors. Credit quality and ratings. High credit ratings. Covered bonds benefit from high credit ratings due to strict regulations. This promotes investor confidence and stability. Regulatory framework. The stringent regulatory framework ensures the quality of covered bonds. This framework protects investors and enhances bond value. Lower default risk. Well-defined asset pools reduce default risk. This characteristic differentiates covered bonds from other types of bonds. Liquidity and marketability. High liquidity. Covered bonds provide exceptional liquidity, allowing investors to quickly buy or sell assets. This feature attracts institutional investors seeking efficient market access. Strong marketability. The marketability of covered bonds is enhanced by their stable demand among investors. This makes them a reliable investment choice in volatile markets. Regulatory support. Regulatory frameworks bolster the market for covered bonds, providing stability and building investor confidence. This support ensures their favorable status. Investor interest growth. Growing interest from institutional investors boosts the profile of covered bonds. This trend contributes to a robust secondary market for trading. Benefits for investors. Lower risk profiles. Covered bonds are characterized by a lower risk compared to many other investment options. Stable returns. They offer consistent and reliable returns which are appealing to investors. Diversification opportunities. Covered bonds provide a chance for investors to diversify their portfolios. Stable returns, stable income generation. Covered bonds provide consistent and reliable income for investors focused on returns. Dual recourse nature. These bonds offer dual recourse, enhancing security and reducing investment risk. High quality asset backing. Covered bonds are backed by high quality assets, ensuring their stability and reliability. Portfolio diversification, enhancing diversification. Covered bonds can significantly improve diversification by adding stability to the investment portfolio. Low correlation. Covered bonds often exhibit a low correlation with equities, making them a strategic choice. Hedge against volatility. Including covered bonds provides a hedge against market volatility, enhancing overall portfolio stability. Regulatory framework, strong regulations. Regulatory framework sets high standards for issuers and bond structures to ensure quality. Regional variations. Regulations differ significantly by region, affecting how bonds are structured and managed. Investor protection. Regulations are designed to protect investors and maintain overall market integrity. European regulatory standards promoting transparency. European directives enhance transparency in covered bond markets, fostering trust among investors. Ensuring credit quality. Regulations ensure that covered bonds maintain high credit quality, minimizing risks for investors. Investor protection. Specific regulations are put in place to protect investors, contributing to a reliable market environment. Emerging regulations worldwide. Growing popularity. Covered bonds are gaining global attention, promoting the need for new regulations. This trend is crucial for market stability. Regional regulations. New regulations are being developed in various regions to ensure the safety of covered bond markets. These regulations support investor protection. Best practices adoption. Countries outside Europe are implementing best practices for secure bond markets. This encourages confidence among investors. Enhancing investor confidence. Effective regulations and secure markets lead to increased investor confidence, driving market growth. This is vital for economic development. Global market trends. Consistent market growth. The covered bond market is consistently grown due to increasing investor demand and favorable regulations. Investor demand. Rising investor interest is a major driver of the covered bond market expansion worldwide. Regulatory support. Supportive regulations foster a stable environment for covered bond investments in multiple regions. Future projections. Future trends indicate continued growth and diversification of covered bonds globally. Market growth and demand. Rising demand. There is a notable increase in the demand for covered bonds globally, especially in Europe. This trend indicates a shift in investor preferences. Stable returns. Covered bonds are increasingly seen as a stable investment option amidst economic uncertainty. Investors are drawn to their reliability. Future outlook. Promising future. The covered bonds market shows a positive outlook with significant growth potential. Investor interests. There is an increasingly investor interest in covered bonds as a stable asset class. Market expansionism. More countries are adopting covered bonds, leading to an expanding market landscape. Conclusion. Unique investment vehicle. Covered bonds offer a unique investment opportunity that blends security with investment returns. Security and stability. These bonds provide security and stability, attracting investors looking for reliable options. Regulatory backing. Strong regulatory support enhances the appeal of covered bonds for conservative investors. Portfolio diversification. Incorporating covered bonds can diversify an investment portfolio and optimize returns. Thank you.